It's 8:49 p.m. Wednesday's night, and right like every day, we are doing our regular review. So, chart looks clean. Market came down in the afternoon, lunch hour, and then went up. Okay, let me apply what I did all day. That's it. So we had. I'm just gonna make this video really quick. It's just for myself, and I have studied it already, so it's just gonna be a quick revision. That's it. So we had good setups in London, marking those 30-minute cycles. That's the Asian high, that's the 30-minute opening range. Market climbs up, fails to take the high. OTE takes the high after 2:30, after 2 actually, after London open, consolidates, manipulate, takes the low, and then takes the equal highs, or maybe just this high. It was good setups actually. I don't mind. Then the main show begins. 9:30 a.m. Market comes down to the daily volume imbalance. It's been tested a few times lately. Climbs up to fill the consequent encroachment of the opening range gap. Comes down. We have a first presented fair value gap. This one comes down, climbs up, retest the top of that fair value gap, and also one inverse fair value gap here, and comes down to the sell side. There's the previous day's sell side. Then it, and interesting thing is, it all happens in a macro time. Then after that, it just do its regular business. I didn't get any setup here, to be honest. And in lunch hour, I don't touch the market. At 1:30, I came back. I saw that the market rolled over that opening range, retested the 50% level from the top twice, and then again at 1:30. And after 1:30, that's when the show begins. And I was actually in 15-second chart at that moment, just to have more detail. So this fair value gap was tested twice, and then this minor sell side was taken by this wick, and then again it was tested, leaving this fair value gap intact. Then market rolls over on top of it, making it inverse fair value gap. I like, if we have to trade, we should enter here. Rolls up. Let's come back to 1 minute. So this candle, first 50% was being respected to go down, to go lower. Then market gives a push up. It retests that fair value gap high, inverse fair value gap, or even this candle climbs up, touches that, you could enter here. Or once the candle closes above it, any candle that comes in it, that like digs into it, it's an entry. It's a good entry point. Here to what level? So these fib retracements are daily candles, premium wicks, quadrants. That's the wick start, 25%, 50% level. That's the high of that previous candle. Where's the wick end? Normally a target would be to 50%, and it delivers beautifully in that macro time. It do its regular retracement. Then we have another macro time, 250 to 310. We have a fair value gap here. Market tests it, climbs up, break the market structure here. If we have missed entry here, climbs up, digs back in the macro time. That's where most of the traders would have taken out of the trade, because their stop loss would be tight, or they would have moved their stop loss so quickly. But if your stop loss is here, or even at the middle of the candle, or middle of that premium wick, you would stay untouched. Then market climbs up, eventually taking this high in that macro time, in that macro 20 minutes. After that, it's all mess. Actually, I'm predicting the London session's gonna be really good tomorrow because we have these equal highs, these Asia equal highs, Asia lows, and it's kind of in the middle. If we see the daily, well, it left a good gap here. I'm gonna use that tomorrow. So that was it for today. Hopefully I'm gonna wake up early tomorrow. Peace.